I am actually.
Oh, I should have worn one too. But like I have been on meetings since this morning for starting from like 9 a.m. and I almost got tricked or robbed because one girl that I know, I think her Telegram account got hacked. So she
Mm.
sent me a link to join, but please retweet, right? It's time to retweet the live stream. And for anyone who just joined, welcome to the live stream with Meina. I have to be very honest, like I can't really keep up this live stream schedule anymore. I did all my planning of the live stream starting like last week. Because last week I messaged, I was like, Jack, you want to talk about Berachain DeFi, right? And they were like, yeah, sure. But then this week I, I've been so busy with Sprout and every day like I'm just so swamped starting from 9 a.m. to probably at 5 p.m. with individual meetings with all the team calls and everybody pinging me. But for live stream or for any content, you cannot get distracted. You will be so locked in, like da, 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 da. So even when my team members they ping me, I'll be like, oh, I'm sorry. Can I get back to you later? But welcome to the channel, Jack. Did you do your tweeting and everything? Okay, let's check. Let's promote. And then we will talk about DeFi, Berachain,
Okay.
finance. Okay. And someone else want to say hello. You want to say hello?
Oh, good guess.
But okay. Before we jump into like the latest change of Berachain, and I know like this year has been quite of a year for all the Berachain like builders, Berachain Foundation
Mm.
people, as well as the internal team and whoever are the Berachain supporters. You guys did the token launch earlier, right, several months ago, but afterwards we know what happened. I also know like it's a very sensitive topic. You don't want to be scolded by Smokey or Papa, but what are your general thoughts as like an important member for the blockchain ecosystem, as well as like you yourself? You probably have some kind of like token investing going forward, right? What are your general feelings? And share just whatever you are able to share.
Yeah, I mean, it's been kind of an you're just talking about like general market sentiment, right? Yeah.
General, and then I mean you can also do some reflection on the token launch, but I don't know if you want to do that. Just share whatever. I will do follow-up questions for sure.
Yeah, no, I'm happy to give some general reflections, right? Because anytime you do a launch, especially a token launch, um, there's always things that you wish you did differently in hindsight. Uh, and I'm not gonna sit here and pretend like I look back at our token launch and I'm like, yeah, we nailed everything there, right? Um, I think there was kind of like an interesting state of affairs for our token launch, which is, market had been pretty solid for a decent amount of time going into it. I think the kind of macro dynamics were that a lot of the existing L1 trade that had been around in the past had started to fade a little bit, and folks were starting to look at things very differently than they had even like a year or 2 years ago. And on top of that, it was kind of like coming off the back of this hyperliquid drop, right? And what made that really interesting was that hyperliquid was a very, very unique drop in a lot of ways, right? Like it was an L1 token, but at the same time, there was like this functional exchange built on top of it. It was like a revenue generating platform. It was kind of like underfarmed and under recognized for a long time heading into the launch. And as a result, you got like a really good confluence of factors of like high quality product, high quality team, token with value, and good distribution. And as a result, right, like I think it set up a lot of expectations. There was this mental framework of the most recent L1 token to launched at like 20 billion plus. I think it created really high expectations within the community and beyond, of how launch would go. Despite the fact that launching an L1, especially one without an existing like massive product like Hyperliquid, is really tough. And then I think there were, mistakes made along the way. I think there were a lot of things we did pretty well. I think there were a lot of things we could have done better, right? Like in hindsight, I would have definitely changed a lot of how Boyko operated and ran. Like I think kind of solo running it on our side, a lot of the focus was on the tech because it was so experimental and because it was going to be such large quantities of money. Like my focus a lot of the time was on how do I make sure no one loses funds, which is important. But I think as a result, like there was probably more operationally that we could have done. I know there was more operationally we could have done in terms of like capping deposit amounts, a little bit more focused on assets, using it more from the eco building POV. Like there was more we could have done there, I think, to make that a success. And then in hindsight too, like it was kind of an interesting spot in that, and I don't think this is something that we regret, but it's something that created a tough dynamic, which is like the NFTs, right? There was this kind of like massive group of folks that had been in Berachain for a very long time, had done very well in Berachain via the NFTs. And like, this is the opportunity that you kind of get as a foundation to make a statement in terms of what matters to you. And so I think like those were a big focus, but it's really hard to give away, you know, multiple points of supply to folks that are up a lot of money and not have kind of negative dynamics there. And then you kind of compound that with, I think we would have probably changed how we did the testnet allocations. I think we probably would have changed how the request for application, request for community programs ran, right? There are a lot of things we would have changed in hindsight, but at the end of the day, you kind of control what you can control. And then there's this kind of like compounding effect of launching into like a really volatile market too, right? And so I'm not going to pretend like that was the primary reason that things weren't perfect, but it was definitely like another extenuating factor that made it even trickier.
Yeah. From my perspective, because I'm always talking to like different Berachain ecosystem DeFi protocols, and I have like, of course, a very strong personal relationship with all the team. So I have my bias. Okay, audience, dear Meina's audience, I have a very strong bias, but I will still try to frame this or ask questions from a more objective perspective, right? Because I also scroll across crypto Twitter. I see people will ask, hey, why are those teams getting like big allocations while they're not doing a lot of things on Berachain? Or they will say, and then there are some like big communities, they will say, oh, they didn't do anything, but they still get that allocation. There's like this constantly ongoing, I guess, accusation from different people about like how the foundation are valuing different things. But can you maybe give us a bit more understanding or your comments on like is this something like that has been like causing discussion within internally? Are you guys planning to change that going forward? Because I mean the past is the past, you can reflect on it, but I think like what we really need to pay attention to going forward, how do you guys gonna encourage a more sustainable behavior both from a retail user as well as like the builder's perspective, so that like okay, going forward, the Berachain ecosystem gonna be up only.
Yeah, I mean, I think there's kind of like two components to this, right? The big thing about RFA that I think a lot of people ignored is like, again, like I said, do I think RFA went perfectly? No. Would I change how?
No, because we also did we submit RFP? Anyways.
No, you didn't, right? And like that was the big thing is
Yeah.
a lot of folks got really annoyed at like the way it ran, but I actually think that like in many ways for the criteria that we laid out, I look back at the allocations and I'm like, again, do I think the program holistically was a massive success? Probably not. Do I look at the way the program was designed and think that we executed really poorly on like the criteria we laid out? Also, no, right? Like I actually think that, I think like that actually is kind of a yes, right? And like I think the argument is, should you have changed what the criteria were? And like probably, but the thing that like most people don't appreciate about this is one, the program was designed to be retroactive, right? It was designed to be focused on testnet applications, on testnet usage, and it did do that, right? The problem is that testnet usage and testnet activity is not necessarily indicative of a project's focus on Berachain mainnet, nor is it necessarily indicative of like that application having the possibility of being successful, right? And so as a result, I think like a lot of teams got something. In hindsight, I would have pared that list down pretty significantly. I think a lot of the teams that got very little and were upset were either correct to have gotten very little in hindsight, or two teams that just weren't very active on testnet, right? And like you could argue that some of those teams deserved more, but again, like this program was retroactively designed for testnet, and so if they weren't active there, if they weren't necessarily like pushing on that, right, like there's nothing I can do about that. And you could argue that it should have been more subjective and more forward looking, and I think that's reasonable, but that wasn't the program that was designed. Now that we're sitting 8, almost 9 months into mainnet, you have like a much better data set if we were to do something going forward in terms of like which builders have been around, which builders have been kind of like sticky despite turbulence, and which builders have found like some degree of product market fit and been successful, and like how do you resource them more effectively. And I think that's definitely questions we would be asking ourselves if we were to run another program like this down the line. I think the bigger thing though is that like aside from the initial RFA, like we actually haven't done any grants or any grant programs whatsoever. And so outside of that like initial launch cohort, it's not actually been something that I think has been an ongoing issue, and it's honestly not something I've seen like a lot of folks talking about aside from those like first 3 months.
And then what would you do differently?
Yeah, like I said, I think differently would be kind of like a combination of selection criteria and execution. And what I mean by that is, I think again now I have 10 months of data, and it would be more by the time we launched anything. And like I actually know which teams are deserving of something kind of like retroactively. I think we would go with a smaller cohort and a more opinionated stance in terms of like, I don't really care if XYZ teams get mad. It's not about giving everyone everything. It's about giving the teams that have the best chance at exit velocity some degree of success. And I think from an execution POV, instead of like, it was very kind of difficult in the early days because we were in this very bare bones version of proof of liquidity. Rewards vaults weren't live yet. Like the only way to really kind of handle it was to distribute directly to the teams, because setting up KPI based milestones for 100 applications just wasn't in the scope of like what I could do by myself. And so, that distribution, for better or for worse, was kind of like how it had to be. And now I think you can get a lot more creative with a smaller application set. You can be more intentional in terms of like how and when funds are distributed. And you can even think of it as like a bribe matching program, let's say for proof of liquidity, where the application still has to have like some capital of their own that they're putting up. It's more of the foundation accelerating that application's distribution via POL. And like, I think that probably makes a lot more sense. But again, even with hindsight bias, that's not something that was feasible at the time of the program's launch. It's kind of only something that's feasible now. The bigger change I would make in hindsight is more just about like application selection, much smaller set. I think there was a lot of impact in terms of like how other chains had done distributions that influenced us, where I think we wanted to go wide and we wanted to go big, and that kind of like bit us in the ass a little bit. Sorry, I'm plugging in my laptop.
Okay, but are you guys planning to do another batch of like, say, incentive program, so to say, for application?
Not in the immediate future. It's something we've talked about in the past. It's something Smokey's written about in the past on the governance forums. He called it like the crime program or something like that, and it was a fun acronym. I think it's something that we are open to doing, but we'd want to do it under the right set of circumstances. And so, I've spent a lot of time in the last few months, maybe even longer, doing kind of like product work internally. We shipped Bend, proof of liquidity upgrades, looking towards more proof of liquidity upgrades and automation. I think what we really, the way I'm kind of thinking about it now is like, yeah, that's always something that you have on the table as an option. I only want to play that card when I feel really confident that we've done a lot of really good work on Berachain, from both an application POV, integration of POL, efficiency of POL, and a user POV in terms of like, what is my UX of actually interacting with these applications. And I think we're really close to a lot of really big quality of life upgrades there. And so, once
You're
we
talking about the Berachain, right?
partially, but even more than that, right? Like that's one element of it, and that's like the big user facing element of it. But there's like really quite a few things happening, and I can touch on that afterward. But you shouldn't do a grant program just because you're like, oh, my TVL is doing X, Y, and Z, or like I need these numbers for the sake of needing these numbers, right? Like you want to do it because you have something that you think is worthwhile to show off. And importantly for us, right? Like I think it's about showing off that there's been a lot of really big upgrades from the last time folks either tried building on Berachain or interacting with Berachain. And a lot of that product stuff can be user-facing things like hub upgrades, which have been happening and will continue to happen. There's a lot of things that we're working on from that front right now. It's product related stuff like launching Bend, and there's a bunch of other kind of quality of life stuff happening on the Bend product side. It's things like from an applications point of view, making the integration of proof of liquidity as easy as possible, regardless of your level of DeFi sophistication, and expanding the number of ways that you can reward users via proof of liquidity. And then from kind of like a validator POV, there's a lot of upgrades going to be coming in terms of like how you automate your cutting boards, how you allocate to rewards vaults, and all those things I think kind of combined with like a lot more stuff I didn't touch on to actually create a Berachain that should look and feel noticeably different than it did on launch.
Yeah, I mean, to be honest, I watched some of your videos explaining about POL, right? Also, like Smokey or people that works at Berachain Foundation or the ecosystem. You guys all created many different infographics to explain what POL is, why is it special, and how it works. But like actually, if you really think about a retail user perspective, they care about the narrative because they will become more bullish, right? But what they really care about is like how do they use this, right? How does this benefit to them? And this is also like one thing that I think about as Sprout every day. And essentially, this is the core reason why I created Sprout at the very first place. Because I just realized most of the retail users or even the DJs, they don't know the hell like what everyone is talking about. Like they don't do the proper like due diligence. They don't go through the technical document. They just want to know which button they are clicking so that they can get the 30%, 40%, or even more APY. And then they will get mad if things are not operating as they imagine how it's gonna be. And I think like, to be honest, like I also tried out the Boyko uh vaults a little bit, right? Initially, it was showing like really, really high APY, but essentially, I think the results or the API return, like a lot of people were also very disappointed. That's I would classify as more like a communication problem from like
Yeah.
Berachain.
I mean, there's, I think, a couple of things there. The first is in terms of people just want to click one button. I agree. That's why we built SW Bera, which users can one click stake into, and you can get 63% APY powered by POL right now. And that's live on multiple centralized exchange earn programs, right? And so we agree, have done that, right? Like it's why it was an early focus.
When was it live? And also like maybe
It's been
we
live
can
for months at this point. And I think there's, yeah,
should we be concerned about the
there's
pricing?
12 million Bera staked in there, right? And so like a not very non-negligible portion of float. It's done pretty well from a distribution POV. And then to the second portion on Boyko, right? Like part of this is a communication thing. I think part of this is like, and I'll own that, right? Like I think there's things we could have done better. We were also very clear before Boyko launched on exactly how rewards would be calculated. When you deposited into Boyko, and this was kind of like for technical reasons, we literally couldn't allow withdrawals after you deposited into the market because like the Merkle, it was all on chain, right? If we, like, you can maybe say we should have just done it more centralized and allow people to withdraw and all these other things, and then they wouldn't have been upset at the underlying rates. And like, sure, I think that's fine, but that wasn't what we wanted to build, right? Like we wanted to build something fully on chain, fully kind of like non-custodial, fully transparent. And we did that. The side effect of that was that like once you deposited into Boyco, you were locked in. There was no incentive to depositing on day one versus on the last day, right? Like there was no difference in rewards. There was no difference in the final APY. We were very clear that the yield being shown started off very high because it's a variable rate. As more people deposit, the yield will go down. As prices change, the yield will change, right? And a bunch of folks locked themselves in to rates that they ended up not being happy with on the last day. And then once prices nuked, right, they were even less happy with them. You know, part of that I think was a design thing. We could have ensured that everyone got good yield by capping vaults. I think that probably would have been something that I would definitely have done in hindsight. It's something we did for the Bend launch, for example. Like the Honey Vault was capped at 30 mil. So all the stable depositors are getting 10+%. For Boyco, it's something we didn't do. But I would say that this is like 50% our fault for not doing caps and 50% depositors' funds for not reading or looking to what they put their money into at all.
Correct. Yep. Okay. I think that's enough like reflection for the past. I mean, at least like we are all put like deep thinking into that. Like I was also just curious. And I hope like in the future the communication. I mean, yes, I think as project founders or builders, we all know, oh, we put this disclaimer. This is not exactly what you will be get. This will be an estimation. But again, like we also need to take into consideration how do we manage the retail user expectation. Because if you sell them with one thing and then the results they're getting is like this big of a difference, of course they're gonna be upset. But if you tell them, okay, you're gonna get maybe around 15% or 14%, but instead they're getting like 11%, I think like not a lot of people are gonna get upset. They will be like, okay, this is what it is, right? So there's usually like a balance you need to achieve that. Okay, but I think there are also very many good news coming out of Berachain ecosystem, right? Despite all the people's, disbelief or arguments crypto Twitter, a lot of people are also saying like Berachain is dying, blah blah blah. I don't think so because I see the team working every single day very very hard on the back, on the front. Even though like every single time you guys send a news, like people are gonna still argue, but I think as long as you are going towards the right direction, we should see an uptick. So I know that you are not the person mainly working on the DAT, but that's certainly a good news for the overall like Berachain ecosystem. Do you want to touch a little bit on? Because I think 2 days ago, 3 days ago, Smokey, Yogi, the Berachain Foundation sent out a notice that you guys just finalized around a DOT of like 110 million, which I think is great news for the Bera holders.
Yeah, I think it's something I wasn't really involved in, which is more of why I said I probably wasn't the right person to talk with you about it. But I think it's actually something I wasn't involved in at all, right? But I think it's the value proposition of DATs has always been, or versus like an ETF, is the ability to kind of like generate yield. And I think as a result of Berachain, both proof of liquidity, SW, Bera, BGT, et cetera, like you actually have an opportunity to generate meaningful yield on the underlying and thus increase the kind of like Bera exposure of the treasury vehicle over time really directly. Should be kind of a nice injection of liquidity into the ecosystem. It helps kind of power POL more directly. And yeah, I think Smokey and Papa et al. did a great job kind of rolling it out.
Kudos to Smokey and Papa. I just want to share the good news in case like my audience who haven't seen this on the like CT front page or on their like newsfeed, right? But I mean, I'm me personally, I think like we have seen Solana did a lot of DATs, and then you guys did this DAT. Like, how this gonna like what's the long term effect of those DATs? It still remain to be determined by the market.
Yeah, I mean, I have no opinion on what the market will do, and no financial advice on.
Yeah, no financial advice, guys.
But,
so
Yeah.
So now I think like we should dedicate like all of our live stream to what should we look forward to at the Berachain ecosystem, right? Because I feel like a lot of DJs actually had participated, or are participating in the Berachain ecosystem. Like, what are some of the yield opportunities you would recommend people to take a look at it? Do you want to like do some live demonstrations so that like we can see what's going on at those protocols?
Yeah, I mean, I'm happy to share a couple things right now. I think let me even pull this
Yeah,
up.
I wanted to do demo from my side, but the bad news is like I have been having trouble opening up my MetaMask wallet this morning with my Chrome extension.
I'm on my work
I-
computer, so I don't have my wallet on it. But this is a Berachain hub. You know, great place for starting off on all things Bera. So, like I said, here is the SW Bera page that I was telling you about. Stake your Bera for 63% APY from proof of liquidity. And so this is probably like the simplest way to get involved in Berachain. You can kind of see here APY trended down over time as more and more people staked, but it's really flattened out. Total Bera staked been generally kind of climbing. You always have the ability to redeem your SW Bera back into Bera. Just be aware that there's like this 7-day cooldown. Second, if you want to get
and
more,
then the APR is like I guess all the yield will be like additional bear when you on stake.
yeah, it's like ST ETH, right? Where it kind of just accrues to your balance directly, so you don't have to claim it or anything else. When you unstake, you'll just have more Bera than you did before.
Got it. And you say this is already also live with like, a couple of like centralized exchange. So essentially, like when you say go to Binance or go to OKX, it's all into the same vault.
Yeah, correct. I think some of the centralized exchanges have limits in terms of APY that they can offer, funny enough. And so I think like Binance caps it at 30%. And so, you're sacrificing some yield basically, but
Who is taking those 30%? Because
I'm
you
not
guys are
sure.
giving
I don't know if they actually take it or whether they can only advertise 30%, but you actually get more, right? Like I'm not sure how it actually operates.
Got it.
Second, like if you head over to the earn page, you can see a lot of the different actions that are proof of liquidity integrated. And so you could say, scroll over to DeFi, you could sort by highest APR, you could sort by the different platforms that have POL vaults, you can sort by asset, for example, right? And so maybe you want to say, I want to do a Berachain LP, and you can see, hey, how do I get this receipt token from the Kodiak pool? Oftentimes, let's see, actually, I have a wallet here. It's definitely not funded though. But yeah, a lot of times you're able to actually zap into these directly. I'm not sure. It doesn't actually look like you're actually able to do this one here, unfortunately. But you can always just click on the link up there. It'll take you directly to the LP. As you can see here.
Browse partner.
Yeah, so you can always easily find it if it's not a zap. Some of them have zap functions that are built in, which is really nice. And so here's like a really good one. This is from the launch of Bend. So if I come over to here, this is the Bend launch, right? You can see we're pretty close to capped on the Honey Vault, sitting about 13% APY on stables, 29.1 out of 29.2 million supplied. You can see the details in terms of like where everything's allocated, performance, risk, like all that good stuff. You can also come over to the borrow tab, right? Like this has been a very popular loop. So far, you can supply Reservoir USD into the vault and then borrow Honey against it and leverage that position if you want. So 91% LTV means you can leverage at 10x and basically not get liquidated. For Reservoir as well, Reservoir, I always misspell it. Right, I'm not on VPN. But right, I think Reservoir generally does pretty good job. I think they're usually about 7% APY, and so If you leverage up that 10x minus your 3.8% borrow rate, you're generating about 30% APY on that leverage loop right now. You just have to be more cognizant of like liquidation risk and a lot of these other things.
Yeah, the liquidation risk will be coming from the reservoir USD's pricing.
Yeah, it's like I would say low likelihood, right? But definitely possible.
Do we know like where does the pricing come from? Is it like one of their liquidity pool or what is it?
So if you actually go to Bend and then you go to borrow and then you click into it.
You are not sharing your screen, by the way. And also, Jack, I think like what will be helpful is
I think you just have to add it. I am sharing screen. I think you just
okay. Maybe okay. I just added back. But I'm just saying like let's just assume the audience is like very entry level user and maybe we can tell them a bit more like, okay, how do you pay attention to the important information so that you know this is the exact risk you are experiencing with this specific protocol, right? Like we just need to be very, very articulate about like how you do things.
Yeah, so I think the super high level, right, for any sort of stablecoin loop, which this is you'll generally have a yield bearing stablecoin on one side and then a non yield bearing stablecoin on the other side. Your LTV or loan to value determines the max amount that you can borrow before you get liquidated. For a yield bearing stablecoin pair, you basically always expect, barring price volatility or the underlying being insolvent, I guess like a Terra type situation, or they get exploited or something like that, right? You always expect this number to be greater than 1, and you always expect this number to be equal to 1. And this number is increasing over time. And so theoretically, your liquidation risk should be fairly low. The biggest thing to look out for is understanding what your yield is from the supply side and how that compares to your borrow rate. Because what can happen is, you can see here, there's $823,000 of available liquidity. You can also see here, there's this interest rate model. And at some point in the interest rate model, you can see here at 91% utilization or at 90% utilization, there's this kink, right? And the borrow rate goes from 3%. And then if you go up a percent of utilization, it goes up to 4%. And then another percent of utilization, it goes up to 5%. And so say it goes up to 94% utilization in the vault. Well, now your borrow rate of 7% might actually be above the stablecoin yield that you're getting from SRUSD. And if that's the case, then you no longer want to have this leverage position on, because you're actually going to be paying more in interest than you're receiving from the supply. And as a result, right, like you'd want to deleverage and or exit that position, as otherwise you can get liquidated even if the price on one side goes up, because your interest from the borrowers will accumulate faster than your interest from the supply.
Correct. And then is there any existing protocols that are doing the leverage borrowing or deleveraging on behalf of the users, or there's not existing yet?
So there's a good amount of existing demand for leverage. So if you see here, and this should go up pretty soon, right? So you see here, there's 9 million of total supply of honey. So like if you lend honey into here, into the RE7 honey vault, it gets allocated at RE7's discretion across all these markets.
Yep.
So you can see here, there's 9 million of honey from the 29 million over here. And of that, 8.2 million has been borrowed.
Yep.
You can see here for WBTC, 1 million has been allocated, 600K has been borrowed, because it's just the delta between these two. SUSDE, basically the same thing. And then you can do the math on the rest, right? One of the things we're pretty excited about is SUSDE. There's this great pool for a while. Let's see if I can find it. Where when we first launched Bend, there's only about $800,000 of SUSDE liquidity on Berachain. So we had to cap the borrow amount at a very small number. But there's this SUSDE, USDE honey tri-pool. And so this is basically like a 3-asset DEX pool. All of these are stables. And the cool thing is you're actually getting 13% APY for lending in this tri-pool. Plus, I believe you'll get 30x sats from Athena, and those are applied retroactively. So really high yield stable pool. And as you can see here, let me actually go to TVL. You can see here in the last 90 days, and really in the last 6 days, we basically went from like 350K of TVL into this pool to now I believe we're sitting at somewhere like $8.5 million of TVL. And so basically what that means is now as we go tomorrow to reevaluate the caps on Bend, we can actually increase the SUSDE cap from Athena. And so right now it's 1 mil. Tomorrow it'll basically be, I think RE7 guys were telling me they're going to raise it to like 11 mil. And SUSDE APY pretty low right now because of demand for leverage. But as that comes up, it'll start to become, I think, a very attractive loop on Berachain as well that can support pretty good size, right? $10 million, not a bad setup.
Yeah. And then this is real-time staking and unstaking, right, for this pool?
Yeah. And so, for example, like if you wanted to get into this pool, all you do is click that hub link. It'll take you over to the pool. All you do is you hit deposit. You can keep amounts proportional or not, and then it'll bring you into the pool, right? And so
it will do the zapping. Like let's say if you just want to deposit honey or SUSD, and it will zap it for you into proportions, and then after that, like
yeah. So I don't have any money in this wallet, so it's hard to show, but yes.
Got it. And then when they unstake, basically automatically they will receive their yield into this like Tri token, and they can.
So yeah, once you deposit liquidity, all you need to then do is come over here and then stake the value.
Yeah. Okay. So it's yeah. I remember you need to deposit the liquidity right into the pool, and then you stake, and then you unstake, and you also need to like, I guess, sell all those tokens back into one token from like a retail user perspective.
Yeah.
It would be nice to have a one-click thing for this. but I guess like this is what Sprout is building, right? So once we are in the process of integration, so essentially users, they don't know anything. They don't need to go to this page. They just come to Sprout, they choose their risk score, and then we do everything for them. Just one button, one big button, deposit, withdraw. That's it. Okay. This is great. I think like if you can have like sustainable yield on this, like 15% on stables, pure stable pairs are pretty good. Is this like incentivized by the Berachain Foundation, Athena, or what is it?
Yeah, so it's the sats are from Athena, and then the kind of base yield right now is being driven by foundation validators. But the nice thing as well is that let me see here, governance.
Yeah,
somewhere around here.
I will be very cautious. I mean, I will be very careful with all the questions because I want to ask for the retail users. So Jack, you have to give like articulate answer, detailed answer here.
Yeah, so as you can see here, I'm just saying things that are public, right? So Athena submitted a proposal to add USDE as honey collateral, as we posted on Twitter. I think it was yesterday, maybe it was this morning. That got approved by governance. So USDE will be added to honey. As you can see, Pemby asked about USDE backing honey. Does it earn yield? And then as Nick from Athena said, USDE within honey is treated on a similar basis to USDE held in exchanges, with rewards passed to the Berachain Foundation, which we can use as we please. And Smokey confirmed that the goal here is to take USDE that has been supplied into Berachain and use it to fuel ecosystem services and recycle it into further PLL incentives for honey pools, Bend deposits, et cetera. And so while in the early days, the foundation validators will have helped kind of initially bootstrap the supply, the plan is really that like as the amount of USDE and honey starts to scale, we can actually recycle those proactively into the ecosystem and start to create some network effects on the back of that.
Mm-hmm. And then, I mean, where is the best place for users to identify those yield opportunities? Because I mean, for retail users, I know there are a couple of vloggers or YouTubers or even like CT accounts I follow, and then sometimes I will check out their video account, right? But again, it's all very scattered. Like what's your recommendation if say there's a really big Berachain fans, they want to tap into the best opportunity, like where should they go?
They want to tap into the best of what?
Yield opportunity or like DeFi opportunity on Berachain. Where should they go? Because
It really,
Yeah, this is so many clicking like on
I mean,
different
yeah,
pages.
it really depends on who you are, right? Like if you just want to get value from Berachain from proof of liquidity and not think about anything, like just stake into SW Bear, right? Like it's literally one click, super easy. It doesn't have to be something that requires brain power, right? Like a lot of these things require more work, but you have the potential for more upside, and that's kind of how it should be, right? Like if you are willing to dig deeper to look for interesting opportunities, then yeah, you should be able to get more value out of it than the retail user that just wants to one click and not think about it. Not that they're not valid, but it's just kind of different strokes for different folks. And this is just the foundation stuff, and so there's obviously like a big Berachain ecosystem as well. I would say some of the ones that are probably worth checking out from an end user POV are places like Infrared, right? Where you basically can do a lot of the stuff I just showed you in an even more abstracted way. You can use IBGT, which is kind of like a counter, like a similar asset to SW Bera, 70% APY, right? You can LST stake into iBera, which is proof of stake kind of style, and so yield is much lower. You can see all the different POL vaults in here, right? Like this is definitely a little bit much more actually DeFi sophisticated. And then if you kind of come back to the ecosystem page, you can also look at things like like Dolomite, for example, right? And so a lot of people got liquidated a week and a half ago, and so yields are a little bit lower than they were in the past. But even here, you can still see that like the PYUSD yield is not bad, right? Like flagging that a lot of this is in Odolo rewards, and so I'd really only mostly focus on the base yield, but some decent yields in here for sure across the board. That's another one that's
by the way, Dolomite founders, improve your user experience. I told them on the call directly. I was like, your product is hard to use from a retail user perspective.
Yeah, it's something I've been telling them for a couple of years, and I also know that they're deep in the middle of a big rebrand right now, and so it'll be improved in the next couple months. They've been doing a lot of work on it. It's I think like a lot of that is also underappreciated in that like if you're used to like an Aave or something like that, then the flows are very simple, but there's also like just a lot more to how Dolomite works than like a standard lending market that I think makes it more complicated to just be like, oh, improve UX. But because part of it is like, I actually think that once you get onto Dolomite, like when you're on there for the first time, you're like, wow, the UX sucks, it's pretty overwhelming. But then once you've used it a couple times and you understand the flow, it's actually like fairly simple. It's more just that the flow is different than a lot of other applications because the product is very different than any other application. And so I agree with you. They're fixing it. I think part of it is more complicated than just like, simplify it, right?
I agree.
Yeah.
I met with like their core team, their co-founders. I think they're super technical and deep in their like DeFi knowledge. They know what they have been doing. But if this is a retail facing or like you are catering to like small users or that not that DeFi decent, like you have to make it a bit easier.
I don't think they are catering to those people, right? Just to be clear. I think they're catering to like DeFi users and they're catering to folks like Sprout, right? That are going to abstract it away for them. Like it's not worth it from their POV, I think, to focus on retail end users from like even a scale POV. And that like for a money market, the way that they make money and the way that they're successful is by increasing the total amount supplied and effectively the total amount borrowed on the platform. And retail users are kind of like great for distribution and for helping kind of supplement that. But at the end of the day, like for someone like Dolomite, I think kind of like a quality token integration with some momentum can lead to $5, $10, $50 million incrementally from like a single user or a single counterparty. And it's much easier for them to move the needle there. And so I think there's like more focus on that side. Baraborrow has some good products as another stablecoin platform. Can't open the site and show you because I'm region blocked because I'm not on VPN right now. Kodiak has a lot of different LPs. So this is this is the largest DEX on Berachain right now. Yeet has a really fun anti-points program. Haiku, if you haven't checked it out, is a pretty cool one as well. And so it's basically like a cross-chain trading framework with like this agentic feedback as well. And so, for your retail user audience, Meina, like you can do really cool stuff here where you can basically say, and I'm not connected with my wallet, but you can even say like, I want to bridge $20 from Arbitrum to Berachain and swap it to Bera. And it'll basically, let's see, it'll probably yell at me that I don't have any money. I don't even know where my captcha is. There we go. But it'll yell at me that there's no money in the wallet. But I don't have the agent mode unlocked on this wallet. But basically, it'll automatically like create that transaction and then execute it for you.
And then the agent mode is also gated somehow.
It is right now, just because I think that they don't want to have like a bunch of people kind of like spamming and using a shit ton of credits. It's still in beta. And there's a lot of other folks, I think, also doing pretty interesting stuff on the trading side, right? And so, for example...
Do you personally trade, Jack? What are you trading? Okay, this is more fun to the audience. What are you trading now? Or what are you doing with your trading strategy? Do you like buy and hold? Do you trade perps? Do you do like long short strategies? Like what do you do? Or do you do sound like market neutral, delta neutral steps?
I'm like definitely more of a buy and hold type person. I mostly trade spot. I will occasionally, like if I'm trading altcoins, I'll usually go long, very low leverage on perps, like 1.2 or 1.5x, right? Like actually low leverage. And then whenever I'm using perps, I will almost always hedge with a short as well. So like I come from TradFi. There's a lot of pair trading in TradFi, right? And so I do a lot of pair trading as well. So for example, like if I want to go long ENA, let's just say, right, I might pair that with an ETH short because the two are decently correlated. And one application I've actually really been enjoying that isn't
tooling. Oh, pair.
Okay. Yeah, so like Huff they aren't even live at Berachain. Like I just really think that this is a quality product. But basically, like one of the things that I find really cool is like, let's say I have that exact trade that I was just talking about, which is like long ENA, short ETH. They even have this little like agent here that will tell you what the correlation between the assets is, rolling z-scores, volatility, and then like the beta for setting up your short. And so like, let's say that you have, let's say that you want to do like, I don't know, 2x lev and you have $1,000, it'll actually like break out everything for you in terms of like, how am I sizing this? And all that stuff. And so, if you're trading on Hyperliquid, awesome. It'll just like set it up for you. And then you can even do like take profit and stop losses based off of like the asset ratio, which is really cool. And if you're not trading on Hyperliquid, if I'm trading on some other SEX or some other DEX venue, like I can even just basically say like, okay, if I put like, let's say I have like $25,000 or whatever, $2,500 that I want to allocate in total across this trade, I can know exactly how much to put into my long position, how much to put into my short position. And then theoretically, it's never going to be perfect, but it helps kind of like balance that out.
I see. Now I think it supports like Hyperliquid and Simul. Like if you click, I see. And then I'm not an expert on pair trading, but this is really cool. So, it's a really cool one. Like you have the correlation score, right? But like when I guess like what triggers you to do the pair trading is more because like in the example you just talked about is like when you are bullish on ENA, but you want to hedge a bit of risk of like it going down, so you do the pair trading. But you think doing this you will still get a little bit exposure to ENA?
You still get full exposure to ENA, right? Like the way to think about why you would pair trade is like, let's say I'm really bullish ENA, but the market's super, super choppy, right? I don't necessarily want to just be long ENA, because if the market goes down, even if ENA is a good product and a good token, I might still lose money, right? So what I'm really focused on is, how do I capture the outperformance of ENA versus a benchmark asset, right? And use that to generate my alpha, right? And so
Mm.
basically, by going long ENA and short ETH, you're saying that if ETH
You
is a good
capture the
proxy
difference.
for the part of the market that ENA is a part of, by shorting this amount of ETH, I'm actually going to remove the market volatility component from ENA's PA and focus only on its outperformance versus the market. And so as a result, maybe you'll have less upside in a raging bull market, but at the same time, like in a universe where, like today, like Andrew Kang got liquidated on his ENA long, if he had been fully kind of like hedged out on the market delta, as we saw like stocks and everything else drop on the open today, then he probably could have had a much more productive long there and focus only on the outperformance. And so similarly, you might say, like, if you're really bullish on Sol, you might go like long Sol, short Bitcoin, right? And things of that nature.
But you're gonna get absolutely fucked if like Bitcoin is going up, so it's going down.
Yeah, I mean, sure, but if Sol, you can get fucked on both sides, I guess. But generally speaking, there will be very few occasions where two majors like that are trading like strongly against each other. And then two, if that trade is happening the way that if that trade is like being executed in that way, it means your thesis for the trade was wrong, right?
Yeah.
Like if the asset that you thought would outperform is going down and your benchmark is going up, it means that was a shit trade, right? And so that's not a failure of your trading strategy, it's a failure of your trade selection.
And how do users know which to pair trade?
Yeah, it's generally just like this is one of the reasons I kind of like pair, right? Is generally speaking, you want to focus on things that are fairly correlated, because that means that you're isolating out more of the component that you want. And so like an easy example to use is probably like more of a TradFi example, right? And so you might say like, I really want to go long Ford, right? I think that's a good car company. I think that it's really underpriced right now. But you might also say like, I don't want to be exposed to the automotive market broadly, right? I don't want to be exposed to American manufacturing. I don't want to be exposed to supply chain issues. I don't want to be exposed to the market in general, right? I only want to focus on the fact that I think Ford is better than other American car companies right now. And I don't think the market has priced that incorrectly. Then you might do something like long Ford and short General Motors, right? And what that does is basically, now you have saying, by shorting General Motors, you can think of it as like an equation where it's like Ford minus General Motors, like what does that equal, right? You're subtracting out all of those things that you didn't want exposure to, and what you're left is only the difference between those two companies. And the difference between those two companies will only be the things that Ford does differently than General Motors, right? And so in crypto, it's a little bit more complicated, I think, because your benchmarks will oftentimes be majors. But generally speaking, what I'm saying with this trade, right, is I'm saying that, by going long ENA and short ETH, I'm taking out all of the risk from the ETH market in general. I'm taking out some of the risk from the crypto market in general. I'm taking out any sort of kind of like ETH specific application building. And all I want left is, what is Athena doing differently to the general market, right? And that's basically what you're left with. The other kind of cool thing here is you can see, right, 73% correlation on
How did they generate the correlation score? Based on like historical pricing data or what?
Yeah, so you can actually read it in the docs, but yeah, it's based on directional relationship between the hourly price movements. But you can see here, right, correlation is lower for Bitcoin. And then you might say like, for example, like Pax Gold, right? It's going to have a negative correlation because these two assets are basically completely unrelated, right? Like it's basically zero correlation between these two assets. And so Pax Gold would not be a good short leg because there's not really a relationship between the price of gold and the price of ENA.
Okay. Cool. And then I see you were also featuring like on your screen TradFi or something like that.
Yeah, so I wanted to like this is a product by a friend of mine, David Zhang, that I think is a pretty cool one. But basically, it allows you to connect and basically create bots and market making strategies independently, and you can choose across two different dexes right now. I think Trade.xyz, which is unit. And Hyperliquid, as well as a number of sexes, right? And you basically can bundle all these things together, and you can do stuff like create market making strategies, trade different assets, arbitrage across venues, do basically like a bunch of like HFT algo trading type products, but in a really kind of like abstracted way. So this is not something that I would recommend to like unsophisticated users, but if you're like looking to upgrade how you're kind of interacting with different venues and start to create more like automated strategies, I think it's a really, really quality product. And like if hypothetically, and this is not something I personally am doing, so it's not something I'll spend a lot of time talking about, but like let's say you think Unit is going to do an airdrop, or you think Hyperliquid Season 3 is going to have an airdrop, this can be a really good way to push volume through an exchange very, very cheaply.
Because they automate the execution for you. Okay. Exactly. But how about the custody of the assets?
So it depends, but generally, like if you're connecting to a DEX, like the custody is in your wallet. And then if you're connecting to a centralized exchange, you actually will import your API keys into the application.
Oh, okay. Got it. Oh, interesting. Oh, this might be interesting for some of my like trader friends. But anyways, we spent the last 10 minutes talking about like Jack's trading, like not advice, but his own trading patterns and his own understanding about like trading in crypto. So take whatever you want, but I think like this is really helpful. Like this is also the first time I take a closer look to a pair and like pair trading. So maybe I will look into that. And going back to ecosystem building a little bit. I know we are also running out of time, but I want to lastly touch on this. Is like you mentioned about you want to have the right builders, the loyal, the committed, the quality builders to come to Berachain. So what products are you like trying to encourage to come to Berachain, or what products, like what kind of products like do you think will have an uptick on within the Berachain ecosystem?
Yeah, and I do have to jump off here, so I'm gonna be short. I apologize, but I think the things that we're excited for right now are there's a lot of pretty interesting kind of like consumer universe applications that are going to be rolling out. I think, Sprout. I think I'm both a puffpaw whale and someone that enjoys how that crew has been building things out. I think there's a couple other things that have been in stealth that'll be getting rolled out pretty soon. I think Robin Markets is one that like I haven't seen that many people chatting about, but it's like really, really thoughtful product design. Basically, it allows you to generate yield on your polymarket positions, because what they'll do is they'll basically pair yes and no's against each other, ensuring that they can do a payout, and then take the capital. And so like if you have $100 of yes and $100 of, or like let's say the market is 50-50 for the sake of this example, right? And you have $100 of yes and $100 of no, and yes wins, they can pay out all the no's from that other $100, right? And so what they can basically do is actually withdraw the funds from Polymarket because they've matched against each other, and then go deploy that into Dolomite, right? And now what's actually going to happen is if you're earning 6% or into Bend, right? Like, and then you're earning 10% yield and that market takes 6 months to resolve, you'll get an extra 5% on your position that you would have already been holding anyway. And so that's a super cool one that they've been working with Polymarket on. And there's a handful of others that I think will be getting rolled out in the near future.
The only risk is, I guess, is the counter or the protocol smart contract risk is when they do the withdrawal right? Because prediction market is a very special mechanism. It's like you can always show once you make the bet, it's a bet, and then it will get resolved with the timeline is specified. Yeah, this is really really smart actually.
Yeah.
Okay, I will make sure to take a look. Thank you so much, Jack, for jumping on my live stream, and thank you for answering all the uncomfortable questions. And I hope like we gonna see an uptick on Berachain going forward. And again, like from Sprout's perspective, from my personal perspective, we will always feature quality product from Berachain or from other ecosystems. And let's continue to build. Thank you.
All right. Great chatting, Meina. Catch you soon.
Bye.
Bye.
Okay. So things like Jack needs to jump out. I will wrap this live stream by myself.
All
Feel
right.
free to.
I gotta jump, so I'll catch you soon, but I'll leave it open so it uploads.
Yeah.
All right. See ya.
Hi. Okay. So I will wrap this up. I hope like I know like during this live stream we talk about a lot of content that's a little bit more suitable for the regions. We talk about trading. So for audience who like this type of content, let me know. But whoever or if you guys prefer like lighter content, also let me know. But I also want to tell you guys like I'm super super swamped by my live stream schedule and also like building Sprout. So maybe I will reduce the amount of stream I do, right? Instead of doing it every single day, I would I would definitely keep the Tuesday and Thursday live streams, but for like Monday, Wednesday, Friday, maybe I will think about it. Unless there's some really hot market narrative we need to talk about. Maybe like we just do either Monday or Friday. But I will keep you guys updated. And again, thank you for joining my live show today. And I will see you guys soon. Remember to like, reply, retweet, or comment, whatever that works for you. See you guys next time. Bye.